Welcome to our comprehensive XAUUSD market analysis covering October 13th through 18th, 2025. This week marked an extraordinary period for gold, achieving historic milestones that will be remembered for years to come. We'll examine the technical and fundamental factors driving this unprecedented rally, analyze expert opinions from leading market analysts, and provide actionable trading strategies for both short-term and medium-term timeframes. Whether you're a seasoned gold trader or just beginning to explore precious metals investing, this analysis will equip you with the insights needed to navigate these exceptional market conditions. Let's dive into what made this week truly historic for gold markets. The week of October 13th to 18th witnessed extraordinary price action in gold, with XAUUSD surging to a new all-time high of $4,242 per ounce on October 16th. This represented the 9th consecutive weekly advance, a streak not seen since August 2020. The weekly gain approached 5%, pushing year-to-date performance beyond 56%, making 2025 the best yearly performance in gold's recorded history. Weekly momentum indicators reached their highest levels since April 2006, while the rally from $3,500 to $4,000 took only 36 days. The largest single-week range on record underscored the intensity of this historic move. 5 key fundamental drivers powered gold's historic rally. First, escalating U.S.-China trade tensions, with President Trump threatening 100% tariffs on Chinese imports starting November 1st, bringing total levies to 130%. Second, Federal Reserve dovish policy, with markets pricing in a 97% probability of a 25 basis point rate cut at the October 29th to 30th FOMC meeting. Third, the ongoing U.S. government shutdown reached its 15th day, creating significant data voids and policy uncertainty. Fourth, heightened geopolitical tensions across multiple theaters supported persistent safe haven demand. Finally, record central bank gold purchases and ETF inflows of 150 tons in September reflected strong institutional demand. Gold's price action during October 13th to 18th was nothing short of spectacular. The chart clearly illustrates the parabolic ascent that characterized 2025's rally, with prices surging from around $4,018 at the week's open to the historic high of $4,242 on October 16th. This extraordinary weekly gain of approximately 5% marked the 9th consecutive weekly advance and the largest single-week range on record. The rally was driven by escalating U.S.-China trade tensions, dovish Federal Reserve policy expectations, and persistent safe haven demand. The week closed at $4,254, demonstrating remarkable strength despite minor profit-taking near the highs. Let's examine the key performance metrics in detail. The week opened at approximately $4,018, having stabilized above the critical $4,000 psychological level. Gold reached its all-time high of $4,242 on October 16th, before closing the week at $4,254. The exceptional weekly gain of approximately 5% pushed year-to-date performance beyond 56%, the best yearly performance in gold's history. This marked the 9th consecutive weekly advance, the first such streak since August 2020, when gold reached that year's peak. The single-week range was the largest on record, reflecting unprecedented volatility and momentum in the precious metals market. From a technical perspective, gold has established clear support and resistance levels that traders should monitor closely. On the resistance side, we have 4 key levels: R1 at $4,260, R2 at $4,290, R3 at $4,340, and R4 at $4,308. For support, the critical levels are S1 at $4,190, S2 at $4,140, S3 at $1,060, and the absolutely critical S4 at $4,000. A weekly close below $4,000 would signal a more significant correction and potentially invalidate the bullish trend. The chart visualizes these support and resistance levels, with current price at $4,242 positioned well above all support zones. However, momentum indicators are flashing warning signals. The RSI has reached its highest level since April 2006, indicating extreme overbought conditions. The parabolic price action, while impressive, is historically unsustainable over extended periods. Trading implications are clear. Chasing prices at current levels carries high risk of sharp reversal. The prudent strategy is to wait for pullbacks to the $4,190 to $4,220 zone, or deeper retracements to $4,000. The critical level remains $4,000. A weekly close below would signal more significant correction underway. The chart illustrates the relative impact of 5 fundamental drivers supporting gold's rally. U.S.-China trade war escalation ranks highest, with Trump's threatened 100% tariffs creating severe uncertainty. Federal Reserve dovish policy follows closely, with 97% probability of rate cuts supporting gold's appeal. The ongoing government shutdown, now exceeding 15 days, has created a significant data void. Geopolitical tensions across multiple theaters continue driving safe haven demand. Finally, record central bank buying and ETF inflows of 150 tons in September reflect strong institutional demand. The correlation between Treasury yields and gold remained strongly negative at -0.71, reinforcing gold's inverse relationship with real interest rates. Market sentiment remained overwhelmingly bullish, though with growing caution about exhaustion risks. The TradingView community showed approximately 75% of analysts maintaining bullish outlooks, citing the dominant uptrend and powerful fundamental drivers. About 20% adopted neutral stances, expressing caution about entering at all-time highs, while only 5% took outright bearish views. Action Forex identified key price targets using Fibonacci extensions, the 61.8% level at $4,317 and the 50% level at $4,410. However, they emphasize that prices are likely to retrace somewhat in the near future, advising caution against catching a falling knife. Forex.com's senior technical strategist, Michael Boutros, warned that gold's record-breaking run marks multi-year extremes in range, duration, and momentum. While the broader outlook remains constructive, the immediate advance may be vulnerable as exhaustion signals mount, with critical support at $4,000. Daily Forex analyst Mahmoud Abdallah noted that gold appears to be undergoing its most stable upward period in years, with approximately 15% gain over the past month and only minor pullbacks of less than 2%. The expert consensus is clear. Buy gold on pullbacks to key support levels rather than chasing at all-time highs, implementing proper risk management with 2 to 3% position sizing and stop losses below $4,000. The chart illustrates our recommended trading ranges for both short-term and medium-term timeframes. For short-term traders with 1 to 2 week horizons, wait for pullbacks to $4,218 to $4,220, $4,150, or $3,950 rather than chasing at all-time highs. Initial targets are $4,300, with secondary targets at $4,330 to $4,340, and aggressive targets at $4,410. For medium-term traders with 1 to 3 month horizons, the expected range is $3,700 to $4,600. Maintain core long positions with trailing stops, adding exposure selectively on pullbacks. Risk management is paramount in these extreme market conditions. Position sizing should risk only 2 to 3% of capital per trade to maintain proper risk-reward ratios. The critical level for stop losses is $4,000. Losses must be limited here for bullish continuation, as a weekly close below would signal more significant correction. For profit taking, take 50% at the first target, 25% at the second target, and let the final 25% run with a trailing stop. Reduce positions ahead of major scheduled releases. 3 critical events lie ahead: the U.S. CPI report on October 24th, the FOMC meeting October 29th to 30th, and a potential Trump-Xi meeting in late October. These events will determine whether gold can sustain momentum or requires consolidation. Let's summarize the key takeaways from this historic week. First, gold achieved a new all-time high of $4,242 with 56% plus year-to-date gain, the best yearly performance in history. The 9th consecutive weekly advance and largest single-week range on record underscore the exceptional nature of this rally. Second, exhaustion signals are mounting. RSI at its highest level since April 2006, parabolic price action, and extreme overbought conditions suggest near-term consolidation or correction may be necessary. Third, the $4,000 psychological level must hold for the bull market to remain intact. A weekly close below would suggest more significant correction underway and potentially invalidate the bullish trend. Looking ahead, the CPI report on October 24th and FOMC meeting on October 29th will be pivotal events. These could either confirm the bullish narrative with dovish Fed policy and benign inflation data, or trigger profit-taking if results disappoint. Our trading recommendation is clear. Buy dips at $4,218 to $4,220, $4,150, or $3,950 support levels. Implement 2 to 3% position sizing with stops below $4,000. While near-term consolidation risk is elevated, the long-term secular bull market in gold remains firmly intact, supported by structural factors including central bank buying, geopolitical uncertainty, and monetary policy accommodation. Thank you for watching.